Hi everyone, hope you're all well and welcome back to Macro Meets Business Insights from Wharton Beyond. I'm your host, Diego Ordonez, the Economic Analysis Chair here at Penn IBEC. Today we'll be talking about recent shifts in international trade, from reorganized supply chains to rising tariffs, and what it all means for the global economy. We'll be speaking with Mike Waugh, a monetary advisor at the Minneapolis Federal Reserve, who also taught at NYU Stern from 2009 to 2021. We'll also have a student opinion section today, where my co-host Cluda Wong will interview someone from our Penn IBEC community about these recent shifts in international trade. Hi, everyone. So we're joined by Mike Waugh. He is a monetary advisor at the Federal Reserve Bank of Minneapolis. He's also a research associate at the NBER, the National Bureau of Economic Research, and he was the William R. Berkeley Term Professor of Economics and Business from 2018 to 2021 at NYU Stern. How are you doing, Mike?
I'm good. Thanks for having me today.
Great. Today basically we're going to talk a little bit about global trade. Obviously that's been a topic of major headlines in recent months and the last year since we've had the change in the administration. As a general context question, over the past year, how would you describe the biggest shifts in international trade patterns?
Yeah, that's a good question. Just as a preface, is anything I say are my opinions and not the opinions of the Federal Reserve Bank of Minneapolis or the Federal Reserve Board. So these are my views. It's been a massive year for trade. I mean, this is probably like we haven't seen anything like this since the Great Depression. And I'm going to tell you kind of two things. One's obvious and one's not obvious. So the first obvious one is how much, U.S. trade policy has changed. U.S. trade policy has generally been a policy of basically open markets to the world. So we had low tariffs. And then when the administration came in late January, early February, they implemented a series of executive actions that basically eroded that structure. So I think, depending on how you measure it, you can say that tariffs went from about 2% to maybe 11%, maybe 15%. There's variations on how you actually measure what the tariff rate actually is, but it's a large change in tariffs. So that's like the kind of I think we all kind of know this when we think about trade right now. I'm going to tell you another thing that I think is less well known, but is actually maybe even more important, is how important trade in AI related products is right now. So you'd have to be amiss if you weren't paying attention to the news that, the big tech companies in the United States are pouring like trillions of dollars into the build out of AI infrastructure. And this is basically going into data centers that includes things like GPUs and data processing units, but also a bunch of other stuff that goes into these data centers like cooling, HVAC, electrical, generators, wire, tons of it. So if you look at trade patterns right now, even though we've had this big increase in tariffs, US imports have not fallen this year. And then you like look at it more carefully and you ask, well, why haven't US imports fallen this year? Is because we are importing massive amounts of AI related products. And these are basically coming from Taiwan and Mexico. And so like this is kind of an underlying theme that's been happening in the US economy right now is that yes, we have the tariffs, but we have this like investment like driven boom in AI that's really changing things.
Right. Great. Yeah, so I mean, you said that we haven't seen really these changes to global trade since the Great Depression. So I guess what I wanted to ask you is, do you think we're sort of entering uncharted territory? Obviously, AI didn't exist 100 years ago. So are we sort of entering uncharted territory where we're kind of setting a new precedent for global trade?
Yeah, I think we are. And I'm going to say like a couple thoughts on this is so yes, we are basically at depression era type tariff levels. But trade back then was much different than trade is today. So back then, that was just things, they crossed the border once. We didn't have integrated supply chains. It was kind of like, I don't know if you look at a simple textbook model in like the Ricardian model, it's like cloth for wine, and that goes from Portugal to England. That's not the way trade works nowadays. Like if you look at, for example, autos in the United States, you'll see parts cross the border, 6, 7, 8, 9, 10 times, going back and forth, back and forth, back and forth. That's the way we've decided to organize our business. So with these tariffs, it's different now because it's like totally rethinking about not just like, do I buy from England or do I buy from China? It's how do I completely reorganize my production, my supply chain, given the fact that these tariffs are here? Then the second thing about this is I'm also very pessimistic about how that these tariffs will go away. So, we have a political process in the United States. You know, people will change power, but the question is like, will the tariffs change? So in the Biden administration, there was very little enthusiasm to eliminate the first China tariffs that came about in 2018, 2019. They left them in place. And I think my opinion is that's the view right now amongst the politicians who get to decide this stuff is there's not a lot of strong um, enthusiasm for moving back towards like a very liberal trade regime that we had. And so that's why I think it is like very like those two issues are uncharted territory in the sense that um, this supply like very complicated supply chain structure that we've developed makes the outcomes different. And then the idea that these tariffs aren't going to go away, at least for the near term. I think that's makes the outlook actually quite uncertain.
Right. Yeah, so I mean, obviously, as you said, tariffs probably won't go away for a little while, but I mean, obviously, I think something we have to recognize is that, tariffs aren't the only part of US trade policy. And in your recent research, how restrictive is US trade policy? Have you noticed that the overall restrictiveness of policy, outside of tariffs has become more protectionist?
Um, Yeah, I mean, I think the way the administration is doing this is twofold. Is one, like in that paper, how restrictive trade policy is I mean, that's just this idea is that not only are we putting on like the level of tariffs, increasing it, but we're kind of discriminating across partners. In fact, if you like the viewers or yourself remember Liberation Day, which was last April, Trump had this big sign and it had all these different numbers on different countries. Well, those numbers weren't kind of random. I mean, they were chosen about like that's a bad trading partner, this is a good trading partner, blah blah blah, and those kind of dictated those numbers. So the issue is like that variance in those tariff rates are actually quite costly. So it's like this idea that we're going to discriminate, not only just put tariffs on, but we're going to start to discriminate across trading partners is a form of restrictiveness. And that's kind of what that paper is highlighting. But then there's just this broader issue that, in a bunch of the deals that President Trump has been negotiating with our trade partners is trying to redirect trade back domestically in the United States. So, for example, he signs these deals with Japan or the United Kingdom or Taiwan or South Korea in a way that there's like local investment in the United States. They want production occurring here. And that's kind of one of these things is like that's a form kind of hesitating to say it's a trade barrier, but it's some way to kind of dictate outcomes that wouldn't naturally occur in the free market.
Right. Yeah. So, yeah, essentially, the Trump administration is aiming towards increasing productivity as much as possible inside domestically in the US. Um, but I'm wondering how those policies can also sort of, and you also talked about sort of discrepancies between the tariffs, given on, how good
Yeah.
of a trade partner it is, a certain country is. So one of my questions is how can this change our international relations between, the US and certain countries? Obviously, recently they've had a bit of a dispute with Canada, who, the US is a major importer of Canada.
Yeah.
Um, and Canada has started to say essentially, we're going to look for alternative channels. So how can sort of these international relations alter global trade in the sense that certain countries could simply look for other channels to get their imports?
Yeah. I mean, I think like the Canada is a good example of this, is that Canada for a long period of time was either our number one like importing partner number two, maybe it's number three now. It's also a big export market for the United States as well. Again, the supply chains is extremely integrated, especially on things like autos. I mean, stuff is just passing back and forth on the border. Okay. So, the more we instigate tensions with Canada and we put these tariffs on, and it makes companies rethink about should I be having a supply chain with Canada? And then the Canadians are sitting there thinking, why should we be integrated with the US market? And so that's when you see these things like it was like the EV stuff with Canada and China. And then President Trump then amps up the pressure on Canada. And these are kind of, I mean, I think, sometimes we're looking for like a clean break, but I mean, these things slowly erode over time. And remember, it's not the politicians that are deciding this. It's like companies that are thinking through. It's like, I want to make a product at a low cost and high quality. How do I do that? Do I buy stuff from Canada? Do I do it locally in the United States? Do I find another trading partner? And then as these companies think through this stuff and they hear what comes out of the administration or other people, they start thinking about, okay, maybe I look elsewhere. Maybe I look in the United States. And this is going to be like kind of a slow moving process as it evolves.
Right. Yeah, so obviously you said that this isn't like a clean break off. These relationships erode over time. So I'd imagine that causes sort of like a period of uncertainty. Because the Trump administration essentially went in and they implemented these tariffs with almost everyone. So I imagine now we're entering a period of uncertainty, which is how are these relations going to develop, right?
Yeah.
So, in since the 2008 financial crisis, global trade has sort of, as a share of world GDP, has sort of hovered around like the 55-60% mark. But we haven't really seen any growth. So I was wondering if, this time of uncertainty could really have an impact on global productivity, or if it's just, something that a small international relations hiccup.
I mean, I was kind of pessimistic about tariffs, but I'm also though kind of optimistic that companies, again, it's like about companies are the ones dictating this. They're sitting there thinking, how do I like lower my costs and provide a better service or a better product? Like, that's what they're doing all the time. And globalization provided this like huge opportunity for companies to expand beyond, the networks that they had in the United States and look elsewhere. And there's a lot of tensions on this and forces like putting into this, but those opportunities kind of are always there. Like, how do I buy it cheaper? How do I provide it? Or how do I get access to a bigger market? Um, but I think back to the uncertainty issue, that is a very important issue right now as well, is that, companies, they want to provide low cost, good products, but they also want certainty about how the markets that they're going to have access to or where they can buy, inputs. And over the past year and a half, we've seen a tremendous amount of uncertainty. And one is just about the tariffs. And this like is continuing even till like 2 weeks ago. So the Supreme Court struck down the IEEPA tariffs. And then, that sounds good, but all of a sudden it just injected a lot of uncertainty because now we don't know what the tariff regime is going to look like moving forward because we have these Section 122 tariffs in place right now, but those are going to sunset in 150 days or so forth. So companies are again being whiplashed and so companies need certainty to make these like conscious choices about where they want to buy inputs from and where they want to sell their product. And it's a hard time to be a business on
Right.
international markets.
Yeah. So, I mean, continuing a little bit on the topic of tariffs, obviously we've been talking about sort of like discrepancies between tariffs and different nations, international relations. But as you said, a lot of these tariffs, the ones that were struck down by the Supreme Court, the other ones that have the 150-day expiration. But I think it was earlier today or late yesterday that Treasury Secretary Bessent said that the sort of general 15% tariffs would soon be in place. So I was wondering how you think those general 15% tariffs could change global trade.
Yeah, I mean, I think, we go from 10 to 15. I this is just but again, that 15% is going to go away at some point, and then they're going to replace this with these Section 301 tariffs down the road, and other measures. So I don't think it's a huge change going to 15. I think the one thing it does do is that at the 10%, basically every country got a deal. So every country's like tariffs went down once we put the 10% on. But once we go to 15, now some countries are actually losing. In particular, like Europe's a good example of this. So we negotiated a deal with Europe in the summer of last year that essentially said the max tariff that we could charge on goods from Europe was 15%. Well, if we put the 15% tariff on, that means that because there's already pre-existing tariffs, that means the max tariff is going to go above 15. So we are breaking the deal with the European Union. That's the problem. I mean, and the European Union is going to come back and have some things to say about this. Um, but that's kind of the consequence of the 10 to 15 right now.
Definitely. Yeah, so I guess another point I wanted to hint at was sort of we've already discussed this a little bit, but the sustainability of this. Obviously presidential terms are only 4 years, right? So, in 2028, if we have a shift from the Trump administration to a different administration that wants a completely different policy, right? How reversible do you think these relations could be? So if certain countries, they decide to find new trade partners, how reversible is this? And can the US lose their position as, a top player in the global market?
I mean, on the one hand, we got to always remember the US is the biggest market, the most advanced market, the richest market. Everyone wants to be involved in the US market. And that's kind of the deal here. Um, with that said, I think, you know, maybe the tariffs get brought down, maybe they reach out to cut some new deals. But there's always this issue about, well, we entered into agreements in the past and they weren't, you know, um, honored. So why would we enter into agreement with you now? So for example, like USMCA, um, that's a huge issue. It's going to come up this year. That's the old NAFTA, by the way, to the audience out there. So that's going to be renegotiated, and I'm sure questions are going to be raised about the durability of that agreement. We had a free trade agreement with South Korea that was ratified by Congress. And then, these actions that the administration took place effectively, destroyed that agreement. So if we come back in 4 years and we want to engage in a new free trade agreement with South Korea, what does that look like? Are they going to want to negotiate with that? So these are the kind of the issues that I don't have answers to, but are going to come to play as we like move forward. I mean, the other thing to point out about this is I think, the American public's view on trade as a great thing has changed a lot over the past, it's 2026. So I'm going to say about 15 years. And in some sense, I think there's like a bunch of myth and fact out there, but this idea that trade has generally benefited the American public, I do believe that, but I think the American public answers that with no. And so that's changed the opinion of politicians about like, is this something that we actually want to pursue? And if we do pursue like lower trade barriers, it puts them at risk of being, selling out the American worker to China, for example. And no politician wants to be labeled with that.
Right. Yeah, I mean, as you said, at the end of the day, politicians act upon their constituents' opinions. So actually, that's a very interesting point you brought up because I was wondering, you know, since that answer would be no for the typical American citizen, could we possibly witness, this is a bit of an extreme word, but like deglobalization into the future? So in the sense that trade just becomes a lot more regionalized.
I mean, we could see something like that. I mean, in some ways, that's kind of where we're moving towards is that, so for example, if you like trade with China has declined a lot and this isn't just about um, the recent tariff actions, but since 2018, the first like trade with China has fallen. Um, Yet we've seen since all these tariffs have been in place, trade with Mexico has increased a lot. So what it looks like is that, some form of this, I wouldn't call it reshoring, but some form of like nearshoring towards Mexico. Again, Mexico is kind of unique because Mexico in a lot of ways has the capacity, has the right labor costs that can kind of take the place of China and other Southeast Asian players. Um, but I mean, it's hard to tell what the outlook's going to be like.
Right. Yeah. So wrapping up a little bit, this is usually a question that I make for the viewers. What are some indicators that your typical person that's trying to follow the global trade subject should follow to really like understand and not really be misled and just have a good idea of how the situation is developing.
Yeah, I'm trying to think about this. I mean, I'll plug my own website, tradewartracker.com, which I have tons of trade data that can be visualized, and tariff data. But I think like one thing to keep in mind is for the general audience out there is this is like a dumb economist thing, but actually how complicated it is. And I'm going to come back to what I said at the very beginning about like these two big trends in the global economy, tariffs versus AI. So when you kind of looked at it, if you looked at we're just naively looking at trade volumes, and you say, huh, it looks like we can increase tariffs and nothing happens to trade. It's a pure win. Well, not quite, because what's driving that is there's this underlying trend taking place in the global economy, which is this AI data center build out, and that's under the hood. And I think the way to kind of understand this is, just being informed about listening to things like I like listen to Marketplace, Kyra's doll, if you're out there, call me up. I really enjoy that program. And I think it's programs like that, uh, you know, provide good education and perspective on what's going on in the global economy.
Awesome. Yeah, that's definitely a very good point. Obviously go check out Mike's Trade War Tracker. But yeah, thank you so much for your time today, Mike, and yeah, we'll definitely be in touch in the future to sort of see how this develops.
That'll be awesome. Thanks for taking the time.
Thanks so much.
Welcome back to another episode of the Student Perspective section of the IBEC podcast. My name is Klutawan and I will be your host today. We will be discussing U.S.-China trade relations amidst increased tariffs placed on Chinese goods under President Trump's current administration in order to balance apparent trade deficits. Today I'm joined by Tony Kim, who is IBEC's East Asian Committee Chair. Thank you, Tony, for joining me on today's podcast.
Of course, I'm happy to join.
Okay, so today I'll just start off by giving a quick background. So on the onset of Trump's presidency, his administration pushed for tariffs as high as 145% to help American companies and cut the trade deficit. My question to you is, do you think that massive tax on imports actually helped the U.S. economy, or did it just make things more expensive for the daily Americans?
Yeah, that's a great question. I think we have to sort of break down this tariff issue on the basis of different industries. I would say for number one, for the high tech semiconductor chip manufacturing industry, I would say it temporarily does help U.S. companies in terms of the competition market, just because imports not only from China but from Korea, Japan, and a lot of European countries are very ferocious competitors. Mm-hmm. And they do supply a lot of the chips that, name brand companies, home brand companies like Apple, Tesla, NVIDIA do use. So it will help a lot of U.S. domestic-based high-tech companies, for example, Intel, right? Mm-hmm. But in the long run, this is not good for the sort of technological competitiveness of U.S. companies that do actually use these semiconductors. So if Apple can't get access to TSMC's very high-tech semiconductors, or if they have to pay a very high price for these, semiconductors, which will obviously drive Apple's phone prices up, then it's obviously not good for the companies in the long run. So that's what I would say for the high-tech industry. For some of the, more mundane, like agriculture or consumer goods that China produces, the effect is even more detrimental and immediate. Because of the U.S. tariffs, which I think amount to like $370 billion overall for Chinese imports, the vast majority of which are like agricultural and consumer goods. China is putting counter tariffs on ranging from products like soybeans to rice and grains. So this is a very, very direct impact that the U.S. customer is going to go through. And definitely, I haven't checked the specific statistics yet, but I do believe the prices for these mundane goods are going to go up significantly.
Yeah. I mean, you touched on like my main question. Next, I was going to ask basically, how do you think it affects large companies such as like Ford versus smaller companies? But I think you already touched on that. Just like going back to the long run and short run impacts, do you think that small businesses will ever be able to recover from such tasks, or is it just going to be hitting them hard?
The U.S. will definitely look for some outsourcing partners, especially because, smaller companies, their survival really does depend on the immediate sort of securing of raw materials, right?
Yeah.
Large companies like Apple or NVIDIA don't need immediate replacements for the raw materials or sort of the tech from China. But for smaller companies that are really just starting off, right, even a small gap in their production cycle can really be a detriment to their survival. So I know a lot of U.S. companies are actually looking towards other markets like Vietnam or India and Mexico in order to find sort of their labor and raw material costs. And for smaller companies, since that was your question, they don't use a lot of sort of the high-tech products that only China and maybe East Asia or some companies in Europe like ASML produce. So in terms of finding like replacements for Chinese labor or consumer goods or raw materials, it won't be all too difficult, I would say.
Okay, sounds good. Yeah. I was reading a New York Times article and they were basically discussing how small businesses have been hit hard. That's on like the American side of things. I also would like to cover like how China has been impacted. You touched on how China has imposed retaliatory tariffs on like American farm goods and like other goods like that. How has this tit for tat battle actually impacted China's economy and trade relations? How has it possibly expanded trade with other countries?
Yeah, that's a great question. I would say that I would point the sort of major Chinese offensive towards the Made in China 2025 project. And this is basically a massive increase in investments for areas like semiconductors, robotics, electric vehicles, and advanced manufacturing, sort of within China, right? Not like borrowing technology or expertise from the West. So actually China, although it is hit hard by a lot of these like sort of supply chain disruptions, it really focused on getting investment towards its domestic industry. And ideally, that's what the U.S. is also like trying to do, right? Really amp up their domestic and intrinsic productions. That really hasn't hit the same with the CHIPS Act, because I do think that the current administration is shying away from investing heavily in the CHIPS and Science Act, which is passed by Biden, right? So there is sort of a political incentive there.
Yeah.
But because China is like fully committed, the CCP is unified, they're committed towards this Made in China 2025 industrial project that is a direct reaction to Trump's tariffs. They are faring pretty well in their technological development.
Yes. I also want to touch on, like, you did talk about, like, the political side of things. Recently, the Supreme Court just ruled that the tariffs that the Trump administration imposed were actually illegal because the president doesn't have the power to use International Emergency Economic Powers Act to impose tariffs without congressional approval. The Trump administration has shifted to using Section 122, which basically allows it to impose 15% tariffs, which I think is only for a span of 5 months. What do you think will be the impact on U.S.'s economy as well as like possible U.S.-China trade relations moving forward? So will the U.S. open up trade back with China? How will it look?
Yeah, I would say in terms of the legal side, I'm not too familiar with like the specifics. That's a little bit out of my expertise. But if something like that did happen, then obviously executive overreach will be kind of curbed. And I do believe that, in the long run, having these like massive tariff wars with not only China, but with our allies as well. So with the entire EU countries or South Korea or Japan, Taiwan, India, really using tariffs as a weapon isn't good for the U.S. global economy. And to speak more on like the political side of things, I do think that, after World War II, the U.S. really had a secure economic and political alliance with, the global hemisphere, basically spanning East Asia to Oceania and Europe, and obviously the Americas as well. But because of this massive tariff war that Trump is imposing, a lot of these allies are turning their backs on the United States. Yeah. For example, like Canada or some of the EU countries like Germany and France are actually having bilateral talks with China, which would have been unthinkable before Trump's term and his tariffs. So essentially what's happening is the U.S.'s sort of political and economic influence shrinking from a global stage to just the Americas. So maybe just Latin or South America, who do, even after the tariffs, currently depend on the U.S. economy, right? So in terms of Trump's tariffs being unconstitutional, you're probably right. The like with a lot of other things like the declaration of war, Congress's approval is probably vital to, making these policy and foreign policy decisions. And yeah, I do think that, some of these domestic institutions like the Supreme Court has to sort of balance executive overreach to curb a lot of these sort of nativist and domestic sort of inward-looking policies like Trump's tariffs.
Yeah. Well, that was all the questions, but I think what you have ended off on has really left us thinking how this challenges U.S. hegemony, if it does compromise it at all, on the economic side of things. But yeah, thank you so much for joining us today. We definitely learned a lot about U.S.-China trade relations in Trump's administration. Thank you so much.
All right, thank you so much.
Thank you.
From today's discussion, we've learned that deglobalization is no longer a theoretical possibility, but a real risk in this new era of global trade. At the same time, the onset of artificial intelligence could fundamentally reshape how and where the world produces and trades goods. This drags us into a period of uncertainty, where we don't know how trade will develop or where the future lies. Thanks so much for watching this episode of Macro Meets Business, and we'll catch you next month.